Welcome to each and every single person who has joined us tonight. This evening, we want to welcome you and welcome to the day 2 of our funding webinar. We will be your hosts for this evening. My name is Mihlali Yawa.
And I am Letlhagonolopo.
And we are representing Eduvos, all 12 campuses across our beautiful, beautiful country. And we have over 27 internationally recognized qualifications.
We've been transformed, now you can be too. Before we continue, we're just gonna play a short video explaining who we are.
Right, at Eduvos, we understand that there's life beyond our walls, making learning a collaborative process. Our interactive and supportive approach to studying is what sets us apart. Our purpose at Eduvos is shaping potential student by student, which means all of you guys attending tonight, towards Africa's prosperity.
We at Eduvos believe that higher education should be accessible to all and that funding should not be a barrier to your future studies. Here at Eduvos, we prefer to see education not as an expense but as an investment. Our key values are in humanity, entrepreneurial, learning, and community. Our education is designed to deepen understanding, support industry-relevant skills development, and challenge thinking in terms of adaptation in new possibilities.
As Warren Buffett once said, an investment, the best investment is to make in yourself. Therefore, if a man empties his purse into his head, no man can ever, ever, ever take it away from him. An investment in knowledge always pays the best interest. Looking at the cost of higher education can be daunting and can be overwhelming at times. But if you break it into smaller increments, you'll realize that the investment of yours is not only manageable, but it's within your grasp.
To get that return on your investment, here at Eduvos, we equipped you with relevant and accredited qualifications to ensure that you don't just survive, but you thrive in life.
Right. So to get that return on your investment, here at Eduvos, we equip you with, so to help you to thrive in the investment of education is Manati. So please give a warm welcome to Rian Yonkub explaining what Manati is all about.
Thank you so much for that fabulous introduction and curtain opening. I also appreciate the virtual hand claps there. Thank you so much. So I'm going to talk to you a little bit about my history because it leads nicely into what our business is about and why we have established our business in order to fund students in what we would see as the missing middle in South Africa. My name is Rian Jonk. I used to be one of the owners of a company called the CTI Education Group. They've managed to go through some changes in names over the year after it was acquired by Pearson. So the colleagues on the hostess on the other side, I'm very well familiar with their business. Over the years of being involved in higher education, what we realized was there was a big move from a lot of bank loans being approved, or student loans, if you like, being approved, to lesser and lesser and less. And over the years, it became quite a low percentage of the overall funding landscape, if you like. People were just struggling to get bank loans, and there's a number of reasons for that. There's a crunch on credit, or a crunch on consumer credit in South Africa, and the banks also became, for their own reasons, very strict on the lending criteria within the bank. And the reason, the way I looked at it was said, like, surely we should not exclude people that or students that have academic capability from higher education because they can't get funding. And our hostess has pointed that out earlier. It's an investment in your future. It's an investment in our future. It's an investment in our country's future, and therefore, to exclude people from capable people from higher education is probably socioeconomically the worst thing that one can do, certainly at this point in South Africa. So I started this business with the principle of saying, if a student cannot get a bank loan, we will do our damnedest to see whether we are able to get that student a bank loan. We obviously look at a number of factors around granting that bank loan, but we are by and large a lot more lenient on our credit criteria. So we can move on a slide, I think even a couple of slides. I think I've explained to you who we are and why we exist. What we wanted to do was make sure that the application process is as easy as possible for the customer. We didn't want to get involved in too much paperwork, so we've created something that's very much online. I'll show you a little bit about that later on. We also wanted to create an environment where the customer, we use the customer, the student, the parent, can get an answer in terms of credit very, very quickly. So we didn't want to engage in a long process where you've got to submit an enormous amount of documentation, and in the end, we say no. We wanted to early on look at the credit and give you a pre-approval conditional to a few things. So we've got that built into the system. It's an absolute commitment-free process that you follow. There's no commitment in terms you have to take up a loan with us or anything. We do a very simple credit check on you. The installments are over the lifetime of the loan fairly fixed. So unlike some of the bank products, it doubles every year because you pay interest on the 1 year, then on 2 years, then on 3 years. Our loan installment is relatively flat over the period. Our interest rates are low. They are very competitive in terms of in the banking world. We see this every day, and we pride ourselves on making sure that we don't take too much interest from people wanting to get into education. And as I said earlier, application criteria is much more lenient. We discount a lot of revolving credit with let's say retail, any form of credit cards. We discount a lot of that. We obviously look at home loans, the way that you've handled your home loan, your car loan, and personal loans at credible financial institutions. And we also look at what the bank would say, both jockeys in the house. So we would look at the mom and dad or any other family member that might be able to contribute towards this investment, as opposed to a bank which would by and large just look at the best jockey in the house, if you like. We think that, as the hostesses pointed out earlier, education is an investment, and it's a family investment. If you invest as a family in a child or children in the house, that's a very good way of helping that person economically thrive. So it's important for us to look at the family as an investment. We can move on another slide. So how do we apply, or how do you apply? We've made it fairly simple as an application process. The very first part of it, which I'll show you in a second, is an online process where you complete the documents where you complete a few fields online. As I said earlier, we don't require an enormous amount of documents up front. We just want to get the basic information in order to make an assessment. We can move on another slide and then press the play button. Sorry, if we could go back one, thank you. We have got, there are two ways of applying. We have partnered with a company called Student Euro. You might have heard of them. Student Euro would take you as a customer, you as a student, you as a family, would take you to a number of banks, a number of financial institutions, and their aim is to get you a loan. Should they fail to get a loan at any of the, let's say, stock standard commercial institutions, they would come to us and offer that lead to us. So it could come through Student Euro, or you can go directly through the Manati website, which is the next page, and you can press play. Then I'll talk you through how that looks. So very simply, you go to www.manati.co.za. That will take you to our landing page. Under the landing page, you'll click on the Manati Loan How to Apply button. Under How to Apply, it talks a little bit about the steps, so you can read through that, but you essentially click How to Apply, and the How to Apply button will take you into the application process. So Wandi is on the line as well, so she takes the application from you. The application process, as you can see, is a fairly straightforward one. We get consent from you to take the application and do a credit check. It's fairly intuitive, so it takes you through the process. If you end up in a dead end, it could take you back. So, for example, if a student applies, him or herself, it will tell you that it needs a sponsor, which it's doing at the moment. And if we eventually get a sponsor that it has got a job, then you start the process by entering the data through the application process right there. And that data then comes directly into our system. And from there, we will get in touch with you in terms of whether you qualify, whether we need more information from you, whether we need documentation from you, or anything else outstanding. That will be someone from our office will be in touch directly with you as a customer. We will take you through that journey, sign you up with the loan, and once the loan signed up, inform the academic institution, Eduvos, that the loan is approved, and then you are ready to go, ready to invest in your future, ready to study. And we try and make that journey as comfortable as possible. It helps you, as I said earlier, invest in your future and hopefully get you a job and make everyone smile, including the family. So that's Manati for the moment. I'm happy to take any questions. I see Ian has asked a question, Ian Stratton. The loan term is generally maximum double the period of studies. So if it's a 12-month program, we are willing to fund that over 24. If it's a 24-month program, it's 40, 42, and so on. We also sign an agreement. So we would sign an agreement for a year, and then if you wish to roll over to the next year, we would settle that agreement. We would then roll you over to the next year and the next year thereafter, so that we don't indebt people forever. If they, we basically sign year by year.
Right, guys. So please feel free to ask as many questions as possible. We've got precisely 18 minutes to answer all of your questions, and more specifically, Rian to answer all of your questions. So please feel free. This is such a golden opportunity for you to understand Manati and how its processes work. So please ask as many questions as possible, and we are going to be here in the meantime. So for the students who are all joining, it is so much important for you guys to understand not only Manati, but hopefully you guys have been watching our webinar since yesterday, and again you'll join in tomorrow just to understand all the funding options that are available to you. And that although you may come from a background that financially it's not the easiest, you are not limited to not studying. There are options for you, and Eduvos is definitely here to not only support you guys, but to realize your dreams as well. So obviously Eduvos, we understand, or the word Eduvos is derived from the word education, and Vos means you and yourself. So we really understand and want our future students to really invest in their education and invest in their future as well. So please feel free to ask as many questions as possible. Right, so a question that I see here, Rian, if you can please answer, is what are the academic requirements for your funding?
So the academic requirement is very simply, if you as an academic institution, you as Eduvos would qualify the customer. So it's by your qualification. We do our due diligence beforehand to make sure that we engage with the academic institution or education institution that leads to a job. That's why we work with Eduvos. We know that they're very strongly focused on making sure that the students get a job in the end. That is for us the important part. So you qualify the student academically. We would fund that if the student qualifies academically by your standards.
All right, perfect.
Rian, I have another question here. They're asking, what are your interest rates?
So the interest rate is always dependent on a credit check and a monthly disposable income calculation that we do. So affordability calculation and a credit check, our maximum interest rate is 16%. So it would vary. It's not a fixed rate. It would vary up to 16%. We generally, our aggregate rate is probably something in the order of 14.5%, if that answers your question. In terms of competitiveness in the market, you will see by applying to a bank that we are very competitive in the market in terms of rates.
And do you guys pay for accommodation as well? Or is
We
it
no, we do not fund accommodation. Unfortunately, because of our model being a risk share model with the educational institution, it's really difficult to make the accommodation funding work.
All right, so I've got a follow-up question from Ian that's saying, is rate linked to prime?
Your rate would be linked to prime. Yes, it's a variable rate linked to prime. If prime goes up, it will go up. It's an unfortunate position, but we can't do it any otherwise. We pay for our capital linked to prime, and therefore we lend our capital out at linked to prime.
Okay. And if someone is under debt review, can they still apply?
The National Credit Regulator would prohibit us from doing that. So if someone is under debt review, that person, unfortunately, and that this is a trap that people get themselves into sometimes very not very purposefully, but it's a process where people say, I cannot afford basically to pay my monthly expenses. I need help. I need someone to restructure it. And until that person comes out of debt review, we will not be able to do that as a organization with a developmental credit license. We would be prohibited from funding someone under debt review.
Right, but just to follow up on that, that doesn't limit a student to apply, let's say, with a sponsor of theirs or a family member. Is that correct?
Correct. Absolutely. Absolutely. We generally find that if someone's under debt review, there's someone else in the family that may help. So let's say the main account holder would then become someone else, but the whole family can still contribute towards the repayment of the loan. It's just the contracting party, the main contracting party, cannot be under debt review.
All right, so I see for now there aren't more questions, guys. I'm sure you guys are just a bit nervous typing a question, so don't be nervous at all. Rian is such a nice guy and he's here to answer all of your questions. Guys, so as I said, if you've got any questions that are specific to Eduvos as an institution, please write them down in the chat box. What we'll do is that our HECs will give you a call and explain all of our different processes. They'll be here and they will be calling you as soon as possible from tomorrow onwards. So please make sure that you ask as many questions as possible, even if it's directed to Eduvos. We will definitely get to that as well. Right. So, yes.
I'm happy. I mean, if there are questions around funding outside of our funding, for example, bank funding, because of the nature of our business, I know a little bit about that. So if you've got questions around that, within reason, I'd be able to answer some of that too.
All right, perfect. That is great. Can we speak about interest rates and how does that exactly work for a student?
So you've got let's say two types of loans in the world of student funding. You've got a student loan, which is a typical student loan product is where the customer, whether that be and that's generally the mom or dad, because they look at mom and dad to be the main contracting party. They would pay the interest on the loan only. So interest on the loan for the duration of that loan. So let's say in year one, the course is 50,000 Rand. You would pay the 50,000 times the interest rate divided by 12 on a monthly basis. It will cover the interest only. Year two, they would add the second year's fees to that, and then you would pay interest on the sum of the, let's say, 50 and another 50 or 55, and year three the same. So your payments will increase. The interest rate there, it varies. I mean, we've seen, if a person is a very, very good customer for a bank, they get prime plus 2. But we've also seen in the high 20s and even early 30s. So it's a massive range. We try and, as I said earlier, we've limited ours to 16% maximum, because we believe that if you invest in education, as a family, we don't want to. We'd rather come to an arrangement with the academic institution versus trying to take too much interest from a customer. The other type of loan that you then get is a loan where the customer would pay basically from the word go a little bit of interest and capital on a monthly basis. That is how our loan works. The loan is a normal amort loan, but we stretch it over a longer period of time, which makes it more affordable on a monthly basis. The interest rate, to be frank with you, between 12 and 16% on the repayment makes so little difference. It's within hundreds of rands. It's a very, very small difference that it makes. But we believe that if there's someone that if there's a mom and dad that pays on a monthly basis, someone's going to make sure that Johnny wakes up in the morning or Sally wakes up in the morning and make their way to class or make their way to their books, or
Yes.
so our model that we developed was based on the fact that there's equity on a monthly basis, because that equity will make sure the student gets to class, and there's a very strong correlation between a child engaging with, or student engaging with his coursework and the efficacy of the outcome. So, they pass if they engage with the coursework, and if someone pays, they will make sure that they get there.
Perfect. We've got a question from Masesi asking, is there any time period in which to apply for funding? So a prime time, so to speak.
Prime time is any time. So what we say is apply as quickly as possible, because then that you've got your funding resolved for next year. If you wait until next year, the problem that happens is whether you have applied for a bursary or a bank loan or anything else, at that stage there are so many applicants that are going into the system just after the matric results are released, that system becomes very congested. So our advice is always apply now. Even if we are just your backup plan, apply early on. You know that you'll be able to afford it for next year, and you can relax. If the other options come through, great. If they don't, you have a very good backup plan. So prime time is all the time.
All right. I think that should be the hashtag for tonight. Prime time is all the time. Right. So I've got another question here from Ian, is asking, is there a fixed term to settle the balance after graduation?
So Ian, generally speaking, if it's a 3-year program, a 3-year degree, you would be able to settle it in a further 3 years. So it will carry on for double, essentially, or equal the time of studies. If it's a 3-year program, you've got 3 years to settle. If it's a 2-year program, another 2 years to settle. 1-year program, another 1 year to settle. That generally fits within the affordability box.
All right, perfect. Right, so we've got about 7 minutes left. Guys, I want those nail-biting questions to come through. I think we've given Rian some nice questions so long. So we've got about 7 minutes left, and I just really want us to utilize this time that we have left. And to remind you once again, in terms of our applications for Eduvos, they are open, so please apply for next year. They are always open. Please make sure you do that. I think Lee will take this question from Assisi.
The next question is, what if the loan isn't covered after the time period given?
We generally, so all the evidence that we've got at the moment, that we've done about 1,500 of these loans, suggests that people do settle it within that period after. The bank would give you exactly the same. The bank would expect you, if you've got a 3-year qualification, to repay that in 3 years post-studies. We generally don't see that, because once the student graduates and gets a job, they try and contribute, and they actually probably settle on average earlier than the time allowed. But Ian, if we have problem, there are, from time to time we have people that run into a problem situation, and we would always make an arrangement to help the customer get out of that situation. Obviously, because we're working with Eduvos, we make sure that they are aware of the arrangement, happy with the arrangement, but it's not absolutely cast in stone.
All right, perfect. I think with this last moment, Rian, if you could just re-emphasize, why would somebody rather come and receive funding from you guys versus your banks, as you have mentioned? What is the one thing that sets you guys apart?
I think if I could sort of summarize it in one is our credit criteria are much more lenient, and we look at the household income. If you go to a bank, the bank would say who earns the biggest salary in the family, and that person would then be put forward to fund it. We say no, it's a family investment. It's a household investment. So we would look at mom, dad, auntie, or anyone else in the family that's willing to contribute to that. For us, it's as a house. As you invest in your house appreciates over time. This is a similar investment. You're investing in your future. You're investing in your child's future, and therefore we would look at the family income. I would say by and large that's the biggest benefit. Just keep in mind that we would take you through a process of applying to a bank anyway. I think it's just a prudent thing to do. Apply at the bank so you know what the offer at the bank is, and then you compare that to what we've got, and you choose the offer that's best for you.
All right. Um, Max quickly is responding to what you have just said. And Max is asking, what if a sponsor's income varies on a monthly basis and a solid earning total can't be given? What would then be the solution?
Yeah, so Max, that's a good question. What we generally do those are typically people that are either on commission or some form of commission, or someone that's self-employed. We would ask for 6 months worth of income, and we would take the average of that.
Great. Um, Right. Thank you from Max. It's a pleasure, I'm sure.
You're welcome.
So guys, so we just want to, on behalf of Eduvos, we just want to thank you so much, Rian, for spending your time with us this evening and imparting so much knowledge when it comes to Manati and funding options for our students. And we know this is not going to be the last time that we'll be speaking to you. And we appreciate you so much. And to all of our guests this evening, hopefully you have learned so much and you'll be able to start your academic journey with us pretty soon. So from us, we are very, very much excited. Please make sure you join tomorrow's evening as well. There's going to be much more information to be given to you guys, and for you guys to understand that because finances are not necessarily the best, you have options, right? So thank you very, very much for myself, Mihlali, and my colleague, Lisa Hanolo. Thank you very much.
Thank you.
Enjoy.
Likewise, thank you. Prime time is all the time.
Prime time is all the time.